Welcome back. So, by the way, just wanted to point out the kind of cuts that we're still seeing across some of the Asian markets. The Hong Kong Hang Seng, for instance, has been reeling under pressure. We'll have the SGX Nifty up for you. That's 40 points lower. But yeah, the mood continues to be a little lackluster. I guess we can put it that way for the time being. Let's actually move on and get to our first market conversation. Dipan Mehta is joining us on the show. Dipan, thanks for joining in. Happy Thursday to you. The stock I want to start with is Zee Entertainment. And now this is not for the faint-hearted for sure, given everything that's going on. I mean, it's a real pot boiler, right? We now seem to understand, going by press reports, that maybe Mr. Puneet Goenka is willing to step away. A lot of people will feel if that can happen, then perhaps the Sony deal can go through in its current form. Would you want to, wager on that? Would you look at the stock at all? Because it is at multi-year lows now.
Yeah, good morning, Surbi, and thank you for having me on your show. And happy Thursday to you as well. But I would have been happier if the SGX Nifty was on the positive side. And again, you would have excitement about Nifty crossing its previous high. But anyway, for another day. Coming to Zee, I think it's completely avoidable. With or without the Sony merger, I think they are losing out when it comes to the OTT battle. And clearly, I think Netflix, Hotstar, are gaining market share over there. So I'm not that positive on Zee per se. No doubt it is cheap. And that's the only thing which is attractive about Zee. Apart from that, I think they are facing a lot of stress in the business. And these kind of, controversies and these kind of developments can never be positive. And from a point of view of, creating a good rhythm or momentum when it comes to business. So I would avoid Zee at this point of time.
By the way, is Thursday, Happy Thursday a thing? Because
I've started this. We start the build-up, then Friday is happiest, but we start getting a little happy on Thursday.
I'll tell you, it was Father's Day, or 2 days back, right?
Sunday.
But then later in the evening, I realized there was two more. There was, there was Bikers Day or something.
Oh, is it? No, I went for the Father's Day.
And there was one more thing.
On Sunday itself.
Not sure, but it was one of those days. I said, well, let me check.
Any day is a good day to be happy. And the closer we get to the weekend, it's directly proportional.
Starting to get a little excited. Well, Dipan, good morning and happy Thursday. Just a quick word on, some of these stocks which are rallying in the mid-cap and small-cap part of the market. So it's not a new list, but the point is that it's a longer and more varied list every day, right? So let's talk about Shriram Finance and Piramal Enterprises. I think we got some more detail about what Piramal is netting after after they sold their stake in Shriram Finance. Stock was a big gainer yesterday. Your thoughts?
Yeah, good morning, Prashant. I think this was anticipated for a very long time, and the management had been indicating on both these counts, that is selling off their stake in Shriram Group companies and also trying to reduce their exposure or cut the NPAs when it comes to wholesale lending to the real estate developers. And I think both are going through quite smoothly for the company. I think Piramal Enterprises has lost a lot of I would say, attractiveness with its investors purely on account of the way the NPAs kept on shooting up. They have tried to reduce the NPAs, write off the loans, make full provision. But still, I think on and off surprises do come. I think this will be the last of such a surprise. And I think it's still a company in transformation. We need to see how the retail loans are picking up and how the non-housing loans also are shaping up. That's the focus area for the management. So I think that from kind of a discount situation, from extremely attractive valuations, we are seeing an up move in Piramal Enterprises, and maybe the stock has some more legs to move up.
So Lupin, Dipan, is the stock going to be in focus? By the way, we'll discuss more on Lupin with the analyst, and the management also joins us a little later. But Lupin and the entire pharma space, you like anything there?
Yeah, Prashant, I think this particular development for Lupin is very positive, and we are seeing good news from Lupin after a very long time, and maybe the up move yesterday was also justified. But these are kind of one-off opportunities, and you will have that bump up in the profits when the actual drug is launched for that period of 1 or 2 quarters or so. But thereafter, I think they continue to face structural headwinds when it comes to the US generics market, which has become extremely competitive. And the price erosions do continue over there, and that's spreading, I think, the rest of the globe as well. So when it comes to pharma, we want to focus on domestic pharma companies, and the new listing, Mankind Pharma, is right under our scanner. And we just trying to find the right opportunity to enter into Mankind Pharma as a measure of disclosure, we just mention a disclosure. And such similar companies, I think, like JB Chemicals or Eris Life Sciences, which are focused more towards domestic businesses, is where I think the larger gains will be, because these companies like Lupin, to an extent, Dr. Reddy's, Glenmark, they will continue to face a lot of pricing pressure overseas.
Very briefly, Dipan, any view on names like Aptos? These are small housing finance companies where there was this overhang of private equity selling. I think in Aptos that has materialized yesterday. Even I think Home First sold off in sympathy. That's another name where there is this overhang. But any thoughts? Growth rates have been very strong.
Yeah, absolutely. I think very positive on these companies, and just need to see how they manage when the actual crunch time comes and NPAs within the sector start to shoot up. But having said that, I think the high growth certainly attracts a lot of investors.
Okay, all right, Dipan, stay with us.
Dipan, you tell us. I mean, the mid-cap party is continuing. Undeniably, there's no taking away from that. So any new thoughts, any new ideas that have crept up on your screen for you?
No, Surbi, I think we have enough ideas on our plate just now and more or less fully invested. There are so many investment themes which are working out. Banking space, capital goods per se, and consumption also shaping up well. And now IT also, I think after TCS, we may see some positive sentiment coming through to the IT stocks as well. So I think it's a full-blown bull market. And more or less, I think portfolios are doing very well. Within the banks, I've said earlier, we like IDFC First Bank. Within the capital goods, VA Tech, Babag, and Praj are some of the names that we are pursuing disclosures here that we and our clients are invested. And within the IT space, I think specialized niche IT companies like Tata Elixir or KPIT Persistent is where our focus is on. Again, I think these are all just stocks that we are positive on, but doesn't necessarily mean a recommendation for investors.
Okay, all right. Dipan, I wanted to ask you about Exide. That one suddenly has come to life. If I look at the chart out there, last few days, Exide has moved very, very well. If you pull up, say, the last 1 week or even the last 1 month, any view at the stock, it's at around 230 rupees now. In the last 12 months, it's up 70%. Suddenly come to life. Your view?
So I think it's going from deep discount to some amount of averaging as far as valuations are concerned. Lower raw material prices and better demand will benefit Exide because the overall transportation sector is doing very well. Look at the way diesel and petrol sales are moving up gradually. So that certainly is positive for auto ancillaries like Exide Industries. And I think the duopoly certainly benefits the company, and they're able to kind of get the pricing going for their finished products as well. But investors have marked down the valuation ratios for Exide purely on account of the fact that they don't have a strategy as far as lithium-ion batteries are concerned. I know they are making some foray over there, and they have some initiatives. But by and large, I think where the EV revolution is taking place, a lot of investors perceive that Amara Raja and Exide may lose out over the longer term.
Okay, all right, Dipan, we will thank you on that note for today. You have a good session, good day. And we look forward to our next conversation.